Okay, so let's continue to drill down the relationship between the SEC and the FCCPC, technically, actually, the bridge between the past and the future. And of course, the planned listing by MTN on the Nigerian bourse has been months and months in the news. So let's get some of the market insights and perspectives into what we received on Friday and is making the headlines already. Let's get Johnson Chukwu, who is the CEO at Cowry Asset Management. He's a chartered stockbroker and investment banker. Thank you very much, Mr. Chukwu, for joining us from your office via Skype in downtown Lagos. But also joining this conversation is Jolomi Odongaro, who is an associate and team lead for fixed income at Afrinvest. Is live to us from our studios at the Nigerian Stock Exchange. Thank you, gentlemen. Hope you had a very nice weekend. Let's start with you, Johnson Chukwu, regarding this new relationship. We want your market straight insights and perspectives into this. We'll talk about mergers and acquisitions and business combinations being done under the Securities and Exchange Commission for the last few decades.
Well, you know, the Securities and Exchange Commission was responsible for all the mergers and acquisitions, all the business combinations in the country until the setting up of the Federal Competition and Consumer Protection Council. The basic thing is with that, with the coming on stream of the Federal Consumer Protection and Competition and Consumer Protection Council, the role that ISA that gives SEC to handle the combination of business has now been passed on to FCC PC. And automatically, ideally, what should have happened was that role, the AD combination coming on stream should go to FCC PC. But interestingly, there are ongoing applications for mergers, for combinations that are already with ISA, already with SEC. And SEC has to go through that. But what they have done is to set up a joint team between SEC and FCCPC to go through all outstanding measures so that the two, eventually, those SEC will provide the technical support, but the job will be ceased to be done by FCCPC. And I think that's what's going on now. I think that will go on until, I want to believe that until the FCCPC acquires the technical competence to carry out that mandate alone.
Okay, so Johnson, in very simple explanation, the steps being taken by the Nigerian government, by President Buhari's administration, to separate business combination, competition, M&A from, take it away from the SEC to the FCCPC is rightly not. That's the best practice even in the U.S.
Yes, absolutely. That's the global best practice. In all countries, there is a body that is responsible for regulating combinations, business combinations, to ensure that business combinations do not lead to the evolution of monopoly or oligopoly, so that consumers are not at the receiving end of the combination. The reality is that the role of the government is to regulate the market environment, to ensure free market operation, to ensure that all operators have access, consumers have access to goods, and that consumers are not exploited in terms of price setting. And when you do not have a regulator that will supervise combinations, you could lead to evolution of monopolies that now exploit the consumers. I think what the federal government has done, what the president has done by signing the FCCPA into law in January is the appropriate thing to do. And that is one of the best standards, in line with the best standards globally.
Thank you, Johnson. Just a moment. Let's touch base with Jolomi Odongaro at the Stock Exchange. So, Jolomi, what's your view about where we are stepping, the bridge we're trying to build now between the ISA and the new FCCPC through this joint advisory procedure? You think this is timely? Do you think this is the way to go?
Yes, definitely it's the way to go. I'm actually a little surprised that it's taken this long, as the other guest rightly mentioned, that this is global best practice. In the US, you have the FTC, Financial Trade Commission. In the EU, you also have a trade commission that manages or that makes sure that any business competition, any business combinations do not cause anti-competitive practices that would affect consumers negatively. So yes, it's very timely, and glad it's come up at least now.
Okay, Jolomi, where would you want to see consumer protection here in Nigeria? Bismarck Rewani earlier spoke about bank charges via ATM, card maintenance. Where would you want to see this new law bite effectively?
That's the thing with this new law. It can't be specific to any one sector. It has to be wide-ranging across the economy. Yes, we tend to look at banks being a bank-led economy, but I mean, you give me an example globally. If you know the Spotify, the music streaming service, is currently suing Apple because it says that Apple's ecosystem is not conducive to other music streaming sites, given that Apple has Apple Music. So, I mean, it can get as granular as that to such services, and it needs to be right across the economy to make sure that no business combinations form that adversely affect the consumer. You can look at, for instance, the airline industry. That is, obviously, you have a lot of ailing companies in there, and you would expect a lot of business combinations there as well. So it's also to make sure that whatever combinations form, it doesn't adversely affect the consumer. So I would expect it across the economy.
Well, Jolomi, perhaps folks are more interested in the banking sector because if you do an ATM transaction and 65 naira is taken from your money, you see that immediately and that bites or pinches right there and then. So folks seem to be more interested in that. I'm sure you agree with that, Johnson Chukwu, because you see that immediately, isn't it, when it bites? Johnson Chukwu, yes.
Yes, interestingly, beyond the issue of the bank, I think the FCC PC should go beyond business combinations. There are instances where businesses...
Okay, well, I guess we lost her. Johnson Chukwu there will try to reconnect. Johnson Chukwu, the CEO at Cowrie Asset Management. The weather around Lagos is looking a bit heavy for perhaps the Monday rainfall. I'm just trying to, it's very tricky to predict the weather. So don't hold me to that if it doesn't rain today in Lagos. I'm not a rainmaker. I just talk about business, finance, and investment. So let's get through the stories for you. What are we talking about? Jolomi, I'm sure you can predict the weather as well. But so what do you traders and analysts, what would you want to see moving forward in terms of this will involve some costs? Do you expect delays? Do you think there'll be bureaucracy? Because now, based on the two-page statement which was issued on Friday, and of course, which goes to the supervising ministry for both the SEC and the FCCPC, which is the Ministry of Finance, there will be two desks where you will have to do filings. They will have to sit down and discuss and review, then get back to you, which is the FCCPC. Do you think this process will bring some delays?
No, obviously, if you introduce new bureaucratic barriers, it will bring some delays. But ultimately, what you're going to find is that this is best practice, and it protects the consumer. So yes, like Mr. Chukwu was about to say, then it's going to go beyond just business combinations. It's going to go towards sectors or segments where there's currently unfair pricing, and look to tackle that like it's said in the act, and that might affect some companies that obviously that might enjoy certain profit margins from the sort of sector they're in. So, I mean, yes, the bureaucratic part is one part of it, but you also have to look at how it might affect businesses on the other end. Obviously, without the powers being merged right now, because obviously the technical capacity lays with SEC before being moved finally to the FCPC at the end of the day. So all these things hamper business, but I believe it's positive, and it's a good direction.
Okay, Johnson Chukwu, the CEO at Cowrie Asset Management, back now on Skype. Thank you, Johnson, for getting back to us. So, in terms of what your view as someone who had been in the market for a number of years, and you've seen M&As, you've seen business combinations handled by the SEC, what do you think will be happening moving forward? There's no sunset clause, there's no end to this timeline as to this transition period. So how long do you think this should normally take before folks start complaining about delays, the costs, and things like that?
Interestingly, SEC already has timelines for conclusion of major applications. Once the documents, all the required documents are put in place, there's a timeline within which SEC must grant approval. I want to believe that the joint venture arrangement they have with FCC PAC will adhere to that timeline in the meantime. I think the entire concept of working with FCC PC is to ensure that there is transfer of knowledge, that there is no lacuna in terms of knowledge gap. If you just immediately transfer that responsibility to FCC PC, because they may not have the manpower at the moment. I want to believe that with time, probably in the next 12 months, that they will either buy the skills and maybe FCC should also think of seconding some of the experienced hands from FCC to FCC. Or ultimately, FCC should be allowed to do the competence out so as to manage these responsibilities.
Johnson, this is the first time that you market operators will be dealing with the Federal Commission and Consumer Protection Commission. This is the first time. You've all been dealing with the SEC and your entire business dealing. So how does this come through to you? Because right now you will have to submit, if you have a client at Cowry Asset Management, you have to submit a set of documents to SEC on one hand and to SECPC on the other hand, and you've got to meet with both of them as it were. So what experiences do you expect to get here?
I think the basic thing is that we must find ways to work through two of them. The application that will go to SEC will be those that involve corporate companies. For private companies that are combining or merging, the application will end with FCCPC. But where it involves corporate companies, then you still have to apply to SEC to take approval. But in reality, that once the competence is there, I do not think that will be a major problem. There are the rules and guidelines that must be followed by applicants seeking for major or combination. And the regulators this time around, the FCC should get those guidelines. I believe the will publish the requirements for application, and that will help those of us advisors to also guide our principals in as we speak now. Cowry has enough applications with for merging, and need to follow through new body, the new the combined group, FCC and SEC in ensuring that we get approval for those applications for merger.
Okay, let's change tack a bit. Let's start with Jolomi Odongaro. MTN is filed papers for share registrations with the SEC and all preparatory to listing by introduction. What's your take on this, Jolomi?
Yeah. Like said in the earlier segment, it's very, very good for the market. What you have is a company that has in excess of 1.2 trillion in revenues, EBITDA margin over about 40%. I mean, we've been looking for drivers of the market, and this is going to be one of them, definitely. Investors are going to want to get in on this, and it's going to encourage other listings now that, you know, MTNCs have gotten over its issues. Yes, we've had a few listings this year, Notori Chemicals notable. But I think getting over this hump with MTN is going to be quite positive, and it's going to stir interest in the market, and we can start to see positive gains in the market again.
Okay, Johnson, what will be in the MTN listing by introduction for you as an investment advisor and a trading and dealing firm? This listing by introduction, there will be no sale of shares yet, but the shares will be listed on the exchange. We don't know the size yet. So when that happens, how do I get in here into this? Okay, I think Johnson Chukwu, I'm sure we lost that. So let me throw that quickly to you, Jolomi, there. So you work at Afrinvest. So this is the listing by introduction. How does it really work here when there's no public offering of these shares, but they're just being listed on the exchange as a block?
Yes. Yeah, like you said, there's not going to be any issuing house is not going to be involved by selling shares into the market to new investors. Rather, it's going to be a listing by introduction, which just brings the shares onto the exchange, and allowing them to now be traded. So that's what I was saying before, that it builds interest in the market, because investors, knowing the size of this company, knowing the growth trajectory of this company, I mean, in the latest full-year numbers, we saw data services grow, digital services grow, service charges grow. So even with that 1.2 trillion revenue, this company is still growing and growing quite well. It added about 6 million customers in 2018. So, I mean, investors are going to be very interested and want to take position. So, it's what is available in the market that you go after. And so that should drive interest in the market.
Okay, so if I'm making a phone call to Afrinvest or to Carry Assets or any other dealing firm, I've never had a shares of MTN before, and I'm interested because it's listed by introduction. How does it work for me? What would I be able to get? Do you think as soon as MTN shares are listed, the existing shareholders are going to lock it up and put the keys in their back pocket?
I doubt that every single shareholder would do that, because again, the incentive is going to come for them for the market price relative to where they took position in years ago when it was not publicly listed. So you will have some investors that, yes, they look at it as attractive to sell in the market, even though we expect this to be quite limited. Like you said, MTN is going to be the darling of the market for the year. The
darling of the market. So Johnson Chukwu is back. Thank you, Johnson Chukwu. The final word from you. If you hold in current shares of MTN and it comes for listing by introduction of exchange, how quickly would you open your drawer and let go, pass a few on to the market or anyone else? What will you be looking for?
Well, I think the position will be, that my advice will be my investors to hold those who are already in the position of MTN. And for those who are bidding to buy, it's time to buy. The reality is that MTN will be the most valuable company in the Nigerian stock exchange once they get listed. In terms of turnover, they are currently the largest, the company with the largest turnover in the Nigerian economy. So the opportunities for growth in the MTN shares are enormous. Beyond that, their expansion, when it as it relates to data services, is quite it's leading the market. So I think it will present great opportunity for investors.
Okay, let's leave it there. I'm interested in one very big question. For everyone in the market, Jolomi and Johnson Chukwu, at what price do we expect MTN shares to be listed by introduction the day it happens? You guys get into straight, try to find an answer. Let's continue the conversation from here. Thank you very much, everyone, for being part of the conversation this morning. Johnson Chukwu, the CEO at Carry Asset Management, and Jolomi Odongaro from Afrinvest. We'll take a break. 2 minutes, we'll be right back. It's the first full trading week in the new month of May. What's happening at the debt market and back at the stock exchange?